She's beautiful, all right, and she wants to get married. But the bond market's about to crash, and the central banks, the Federal Reserve, is leading us into a huge disaster. Here comes my honey.
Oh, Larry.
Hey, Sugar Plum.
It's the folks' sake. We had a terrible scene. I couldn't sleep a wink. They don't approve. They want me to finish 2 more years of schooling before I even get engaged. Oh, Larry.
The bond market is unstable right now from all the debt. The government is borrowing money like crazy. Who's going to repay it? Inflation is coming. Inflation is coming. We're in trouble economically.
But, Larry, I wanted a church wedding. And all the parties and showers for me, too. And my folks, that would break Mom's heart.
Yeah, but it's going to break my wallet.
I don't know, Larry. I read somewhere that a marriage without parents' approval has 2 strikes on it from the start.
Inflation will cause butter to be $10 a pound. Gas will be $10 a gallon. What are we going to do? I think marriage is out of the question. Maybe we should go talk to a financial counselor. Let's go to that pastor at the church. He'll know what to tell us to do.
Do you think he could help me with my folks? My folks don't understand the way I feel. So that's the story, Mr. Hall.
Well, I understand. You're 18, he's 19, you want to be married? But inflation is coming, you all know that. What are you going to do about that? Huh?
Honey, you know they're going to change our currency. Nobody will trust the dollar. I know. They'll introduce a cryptocurrency. Then we can buy and sell, right? Right?
Yes.
Well, as you know, President Trump is forming that task group to restart the economy. Everything's going to be okay. Now, I know that you have to be tested for coronavirus, and then you'll get a certification, and then you get a credit card and a number, and you can buy and sell when your data is in the big database. Now take a look at my chart. Notice you have similar backgrounds, you have real friends, and you understand marriage. It's too expensive. Nobody's going to survive the economic chaos that's coming, you know that. The government has already introduced social distancing, but now we're going to get into psychological distancing. This occurs when your rent doubles, the price of milk goes to $5 a gallon, you can't afford to buy any meat at all because it'll be contaminated by the virus, and you will be especially hurt by stagflation.
Stagflation? Does that have anything to do with horses? I wonder.
You're a sharp one, aren't you, Larry? Banks will start charging interest rates in a negative zone because they can't get rid of all the money. Inflation, quantitative easing, all the things that the government is doing to save us from coronavirus is going to have to be paid for. Inflation is coming. You're going to be worth about 10 cents on the dollar, and you want to get married? What are you, some kind of a nut? You have psychological distancing happening already. This is what's going on. Take a look inside your own coconut. You're far off the mark, buddy. I predict you'll be divorced in 2 weeks.
No, sir. This is forever with Larry and me.
Ha ha ha, you're nuts. Even people that have been married for 30 years are going to struggle with inflation that's coming. Who's going to pay the bill for all this debt? Who's going to pay?
But there isn't any time. Larry's going away in a couple of months.
But joining the army, Larry, will not solve any problems. Social distancing, psychological distancing, inflation, it's going to take years and years to get this problem solved. The country won't be the same. For sure you'll take the mark of the beast so that you can buy and sell.
You talked about inflationary pressures leading to a spike in interest rates. You talked about other factors leading to a spike in interest rates. But one thing you didn't mention is that a big chunk of our fiat currency, our U.S. dollar, is based on the full faith and credit of the U.S. Foreign trading partners are buying our treasuries because they want to sanitize trades with the U.S. in terms of our international trade. But there is a movement afoot now of people starting to de-dollarize their transactions. Isn't one of the big threats down the road is the loss of confidence in the U.S. dollar that really causes rates to spike uncontrollably and would effectively eliminate any ability of the Fed to monetize that debt?
Well, I think there is going to be a loss of faith in all fiat currencies, not just the dollar. So you think about the dollar, you have to talk about it in pairs. So the dollar is quoted in pairs. So the dollar euro, the dollar yen, these are currency pairs. Dollar gold is another pair that I really like to look at. Again, I'm not a perma bear. I'm not a perma bull on precious metals, or I'm not a perma bear on the dollar and a perma bull on China. So I'm not a perma anything. I would say I find it very difficult to reconcile an idea that the US dollar would lose a tremendous amount of ground against the Japanese yen. And the reason why is just you look at the difference between central banks' balance sheets, you look at the difference between their bond yields, fixed income yields for the sovereign debt. Very hard for me to come up with that scenario, and even with the euro. But what I absolutely believe wholeheartedly is that the dollar is going to lose its purchasing power concurrently, so in confluence with the euro and the Japanese yen and the Chinese renminbi, concurrently against precious metals. And I believe we're all going to look like Rome. You know, I like to look at Rome, the latter stages of the empire, where inflation went to 1,000% per annum. And the reason why you see hyperinflations throughout the history of the globe, you look at the Hungarian pengo, you look at Weimar Germany, Argentina, Venezuela. These were pretty much isolated instances where a banana republic or something similar to banana republic had a currency crisis. So the Hungarian pengo lost a great amount of its value against the US dollar, which at that time was backed by gold, thanks to the Bretton Woods Agreement. So what I'm saying is, in the next iteration of inflation, we're all going to look like Rome. Rome really didn't have a vibrant currency market, and it was predominantly the only power of the day. So the citizens of Rome weren't afraid of inflation by looking at their currency collapse on a daily basis on FX exchanges. They were looking at something called debasement, currency debasement. Okay, so putting base metals into their precious metals, into the denarii. That was occurring over many decades, which eventually led to the average citizen of Rome eschewing Roman coins and causing inflation to rise to 1,000%. I think the world eventually will have to eschew fiat currencies, which will cause a spike in inflation and may bring about something called the IMF, SDR into the fore, although that's composed of what? Fiat currencies. So I don't think that's a solution. I mean, you can't put the yuan and the dollar and say, okay, there's a basket of these special drawing rights, and that's going to replace the dollar. What I think could be tried is some kind of international cryptocurrency, which is backed by gold. That might be tried. A massive currency and debt reset might be tried. But these are very chaotic things.